There are less than 48 hours left until 21Shares Spot XRP ETF goes live. This could be the next big wave for institutions. After seeing Franklin Templeton make $178 million on the first day, everyone is waiting to see if 21Shares can do the same. I will explain what 21Shares brings to the table, what the current technical picture tells us, and why Friday's start is important for the bigger story of the XRP ETF. Let's get started. Thanks for coming back to XRP Graph Market. If you're new to our site, we provide crypto research that is good enough for institutions without all the hype. Make sure you subscribe and click that bell so you don't miss our daily posts. Let's talk about what's going on this Friday morning. At 9:30 a.m. Eastern Time, 21Shares will officially start their spot XRP ETF on the CBOE BZX exchange. It will be known as TOXR. For people who don't know about 21Shares, it's a company that takes care of about $2 billion in crypto-focused investments. While not as big as Franklin Templeton's $1.53 trillion, these companies have been around for a while and have a good track record in both European and now US markets for crypto ETFs. This start is important because of these things. 21Shares is an expert in crypto goods. 21Shares has always been involved with crypto, unlike standard asset managers who are now getting into it. They know how the market works, what the standards are for custody, and why institutions want to invest in digital assets. They've been to rodeos before. They've put out a number of crypto ETFs in Europe and have been building infrastructure to help institutions use crypto. The numbers that are expected for Friday's start are interesting. Analysts think that trade volume on the first day will be between $100 million and $200 million. Not as much as Franklin Templeton's $178 million in net gains, but it's still a lot of money. Remember that Canary Capital's XRPC started with $58.5 million in volume. If 21Shares hits the high end of their predictions, they'll be about 3 to 4 times bigger than Canary's launch. But this is the important question. Can 21Shares do as well as Franklin Templeton, or even better? They have some things going for them and some things going against them. On the plus side, 21Shares is well known in the cryptocurrency world. This name is already known to institutional investors who deal in digital assets. There are already connections between them and crypto-native funds and family offices. That could mean that cash is used more quickly on the first day. One problem is that Franklin Templeton has a much bigger network for selling standard investments than 21Shares does. Franklin can get in touch with pension plans, retirement accounts, and other standard institutional channels directly. 21Shares is more likely to see institutional money that is already invested in crypto than regular investors who are just starting to play with XRP. Now let's take a look at how XRP is currently set up technically, as this is important for figuring out what might happen on Friday. As of this recording in the morning, XRP is worth $2.10, which is 4.85% less than it was yesterday. After the recent ups and downs around the Franklin Templeton launch, prices are now starting to settle down. We're keeping an eye on the $2.10 to $2.15 level as a key support level. This zone has held many times and shows that there is a strong desire to buy. We need to take back $2.35 from the resistance level to show that the next step up has begun. If a lot of people buy XRP and it breaks above that level, the next goal is $2.40. After that, the range of $2.49 to $2.56 is possible. After that, analysts see $2.70 as the next upside goal in the near future if momentum keeps building. At the moment, the RSI is in neutral territory, which means it can move in either way without becoming overbought or oversold. There is some negative pressure on the mass ED, but it's not yet clear what it means, as the market takes in its recent gains and waits for the next big move. This looks like a good consolidation. That could happen with the start of 21Shares on Friday. Also, pay attention to the trends of the volumes. The trading environment is pretty steady, with no big jumps in selling pressure. This measure, called volume in money, tracks the flow of money between institutions. It shows steady accumulation rather than distribution. This shows that smart money is still positioning and not getting out. This is the bigger picture that counts. The 21 shares that go on sale on Friday are just one part of a much bigger wave. Bitwise is putting out its ETF. CoinShares is putting out its ETF. Grayscale and WisdomTree should be out early next week. Up to 9 XRP ETFs could be trading on U.S. platforms by the end of the day on November 25th. This is more than one event. This is a planned build-out of institutional infrastructure that is taking place right now. When this many big banks release new goods at the same time, it shows that regulators are confident. They don't file ETFs and go through the approval process unless their lawyers think it's safe to do so. The case between the SEC and Ripple has been going well for Ripple. For example, programmatic sales were found not to be securities offers. That clear legal framework is what makes all of these events possible. Let's talk about what will happen if 21 shares are more than expected. If they get more than $200 million in first-day volume, that would be a strong sign that institutional demand for XRP exposure is rising and not staying the same. It would also put pressure on the other ETFs that are coming out this week. Fund managers will be keeping a close eye on these launches to see which goods are getting the most money. This could affect how they decide to allocate their own money. On the other hand, if 21 shares don't do as well as expected, like selling less than 100 million shares, that could mean that the first wave of institutional demand was already there when Franklin Templeton launched. It wouldn't be the end of the world, but it would show that the market needs time to get used to the current wave of ETFs before the next one comes along. The price of XRP on Friday will also tell us a lot. If a lot of people buy TOMXR at start and XRP goes above $2.35, that's a bullish confirmation signal. It seems to show that the money coming into ETFs is starting to push prices up. But if XRP stays in a narrow range or goes down, even though ETFs are buying a lot of it, that means there is still selling pressure from other sources that is canceling out the institutional buying. The custody flow is something to keep a close eye on. 21 shares will probably use a big safekeeping service like BitGo or Coinbase Safekeeping. For every share of TOMXR that is made, real XRP has to be bought and put into cold storage. With EasyRP from Franklin Templeton, XRPC from Canary, and now 21 shares TOMXR, hundreds of millions of XRP tokens are being held by institutions. Because of that, there will be less supply on platforms, which should push prices up over time. This is what we're watching on Friday morning. First, the volume at the start of dealing in the first 30 minutes. A high opening volume usually means that institutions are already positioning themselves and there is instant demand. Second, how the start affects XRP. It doesn't break through barriers, so does it stay put? Third, the numbers that experts reported later that day about the money coming in. Official numbers won't come out right away, but early estimates will be closely watched by people in the market. Analysts think that between $4 and $8 billion could come into XRP ETFs over the next 12 months. If just 21 shares get 10% of that, that's $400 million to $800 million in assets under control in a year. That would be a lot of growth for a company worth $2 billion, and it would solidify their place as a big player in crypto ETF infrastructure. Let's talk about the risks now, since no start is certain. First, all crypto assets, including XRP, will probably lose value no matter what ETFs are released if market conditions worsen on Friday morning or if Bitcoin goes through a big drop. Second, there is real pressure to compete. Investors have a choice since 9 ETFs are coming out in 2 weeks. If another ETF has better liquidity or lower fees, money might move there instead. Third, regulatory shocks can happen at any time. Even though the situation seems good right now, sudden events could cause instability. The only reason for this study is to teach you something. It's not advice about money. Do your own study before investing, watch out for risk, and never put more money into something than you can afford to lose. That's all there is to it. 21 shares starting talks are on Friday is another big company proving that XRP is a good investment for infrastructure. Their focus on crypto-native projects and connections with institutions put them in a good situation to get a lot of capital, maybe $100 to $200 million in the first day. XRP's basic picture shows that it is consolidating well, and there are clear levels to keep an eye on. It's important to break through $2.35 in order to prove that the next leg up is real. We're in the middle of a historic wave of institutional usage for XRP, With more ETFs coming out all the way through next week, the start of 21 shares on Friday is just one more piece of information in that bigger story. That's how 21 shares of Toxar will be released on Friday. If you thought this analysis was useful, please click the like button and sign up to get daily crypto news and analysis. Let us know what you think the first day volume for 21 shares will be in the comments below. Will they make $200 million or not? I'm reading all of them. Take care, and I'll see you in the next video.